Hi, this is Zach Mayer with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 29th of September. Starting off with the FTSE 100, which is actually looking as though it's in a good place. We've had multiple bounces off a rising 50-day line. We've bounced off the floor of that rising trend channel, the one-year channel there, 82.30 now, and above that looking for a break of the May resistance line there, 83.60, to take us up to as high as 86.50 by the end of next month. Obviously, the end of next month is the budget, but maybe the market looking forward to that, or maybe looking forward to the resignation of the Prime Minister. Who knows? Moving on to the DAX, and here you can see that we've gapped higher spectacularly at the end of the week, and looking for the top of that rising trend channel from this time last year, 20,100, hopefully by the end of next month, or even much sooner, the way things are going, could be by the end of next week. The RSI still not in the overbought area, so below the 70 level, and we're looking for the upside there, especially while we're above the 19,050 zone, which was the top of the, or the floor of the top of the gap there from back on Thursday. Worst case, obviously, is that we would head back to the floor of the channel there, but the way things are going with the gap through resistance, that seems rather unlikely. Onto the Dow, and here you can see that we're also stretching higher towards the top of that rising trend channel from this time last year, once again, 43,100, looking for that hopefully early in October, or at least by the end of October. Obviously, we've had basically a bear trap rebound from the middle part of this month, and no real setbacks within that at all. But if we do have any setbacks, 41,500, the favoured area, as that was the summer resistance before the big move to the upside. Moving on to Bitcoin, which is slowly rehabilitating itself. Here you can see that we're approaching the top of that falling trend channel, which has been there since the end of February, 67,700 now. We're looking for an end of day or end of week close above that to give us a return to the best levels ever, towards 74,000. This stage, ideally, we stay above the top of the latest gap there, 62,500. On any dips, worst case would be a test of the 50-day line, just above 60,000. Moving on to gold, and here we hit the top of that rising trend channel from December, 26.90. We've come back from that now. We're looking for an end of day close above 26.90 to give us a move to the top of that rising trend channel. The steep red June one as high as 2,900 by the end of November, I suppose now. There is the risk of testing 26.20, which was the initial September resistance for this market, and also is the floor of that June trend channel. But at least while we're above 26.20, still looking for higher ground on gold. Moving on to the stocks, and starting off with Coinsilium, which had its interims out on Friday, and here you can see that the stock already ready for action in terms of the 25% rally that we've had since then. The old support there from July around 1.6 pence. Above that, we're looking for at least the 200-day line at 2.1 pence over the next few days. Best case would be up to 3.8 pence, maybe by the end of next month, if we can get the type of move that we had in December, January to be reignited, with the key here staying above the old July support. Next up is a stock which I don't normally look at, but I give it a mention now and again, Ceres Power. Here we had a rising trend channel there from back in November. The old resistance line drawn there, the target line there around 307, and while we're above the recent support there from May around £2.40, we're looking forward up to £3.10 by the end of next month. I suppose always worth looking at the news there, and that was the rise after the record orders and interim results on Friday. Moving along to Contango, which I have not looked at for a while, but here looks as though we're bumping along the bottom here. We had a gap higher back in June, and we basically held that gap area around just below the 1 pence level. Now had a weekly close above a rising 50-day line there at 1.2 pence, and above that we're looking for 2 pence as soon as the end of next month. I think we've had enough consolidation near the lows, and that failed gap fill there, or gap fill there that we had from June. A decent signal, as you can see from the hammer candle that followed it. Moving on to Cora, which has been one of the stars of the show over the last week. I think an announcement on Monday, and the shares basically blowing the doors off in terms of not only the first target there around 2.47 pence, but then the second target there very close to that now at 2.84. The bigger picture is that we're going to head back to the old support on the way down, which was around 3.6 pence, and we're looking for that by the end of this month, while we remain above that 2.5 pence area. So beautiful move there. Another beautiful move came with Emmerson, where I suppose slightly counterintuitive in the sense that normally a CFO departing means that the share price goes down, but in this case we have broken the falling wedge and the 50-day moving average there at 1.5 pence, and looking basically for a return to the main early 2024 resistance around 2.6 pence, which has been sticky point for the shares ever since, but at least while we're above a penny and a half, looking for greater glories there on Emmerson. On to Global Petroleum, which has also been a winner here on the Bulletin Board Heroes. Beautiful move higher over the course of September. Golden cross as well, just missing the second target there at 0.21, and after that we're looking for a move towards 0.28, which is a May 2023 resistance line projection, and hoping for that by the end of next month, while we remain above the two peaks there from earlier this year at 0.16. On to core Potash, which is also rising. Maybe it's something to do with Emmerson rising as well, but anyway, we've got the situation looking very healthy indeed. Rising trend channel there from May, and the top of the channel pointing to up to 4.1 pence, which we're looking for by the end of next month. Ideally, we stay above the floor of the channel there, around 2.3 pence ahead of that. But what a great looking chart, one of the best trending looking situations around, apart from perhaps mobile streams, where this has been the gift that's kept on giving. The shares basically a buy around the 0.04, 0.05 level when they broke the 200-day moving average, and it's been up and away ever since. The sizzle here on a fundamental basis that the company doesn't need to do any placings, and the sizzle here on a technical basis that it has also blown the doors off all the targets we've had. This is the third or fourth, I don't know. Next target here up to 0.24, which was the old support on the way down back in 2022. After that, looking for up to 0.33 as a best case scenario target by the end of next month. Ideally, we stay above the recent or the former target there, 0.18, ahead of a move towards the low 0.3s. Moving on to a stock which has perhaps not covered itself in glory in the recent past, but looks like it may be ready to turn around. We bounced off old resistance there at Mobile Tornado, just below a penny. Let's call it 0.95, and looking for the shares to at least rally back towards 1.5 pence and the 50-day moving average. Obviously, the spike in May was a bit of a one-day or a two-day wonder, which is was rather disappointing. But be cautious here. You might just want to wait for an end-of-day close above the now rising 200-day line. But looks as though with that strong candle on Thursday, the shares are on their way. Another stock which was mentioned here and probably nowhere else was Neo Metals, and here we had the Bear Trap Island reversal, in fact a double one there for August, another gap to the upside earlier this month, and a fresh one this week. Break of that resistance line there, which was the old target there at 5.5 pence, means that we're looking for up to 11 pence, hopefully by the end of next month, something which would take the shares back to where they were at the beginning of the year. Only back below the floor of the latest gap there, around 4.8 pence, really delaying the upside scenario. Another stock which has been limit up in terms of the rally has been Roadside Retail, with the classic step ascent that you see in the strongest of situations, especially the last one. Looking for the shares to stay above the 50-day line there at around 17.8 pence, and while they do that, looking for 30 pence, perhaps as soon as the end of next month. Not quite so smooth has been Tungsten West, but here it looks as though we've got a positive consolidation. We bounced off the 50-day line and closed a weekly close above the rising 200-day moving average. That suggests the next time these lines cross, it will be a golden cross, and the run up to a golden cross is the strongest part in the cycle. Looking for 5.5 pence and that April resistance line by the end of next month, while we remain above recent support there at 2 3/4. Looking at UOG again, and here it looks as though the shares, maybe with a promise of Jamaica or something like that, looking rather better. Potential W-shaped turnaround here. The initial target, obviously, the old gap there at 0.17. But if we can get through that and maybe the 50-day line, then it could be a move to the mid-0.2s by the end of next month, although it has to be admitted the shares have not exactly covered themselves in glory in the recent past. Finishing off with Vinanz, which rather remarkably managed to get away a placing at 13 pence a share and raising £608,000. What's interesting here is that the shares have remained the same price, so obviously that looks like a rather strong situation. We've been looking for an ongoing rally here, and I suppose the latest here would be a move towards the top of the channel I'm attempting to draw at the moment, which is up to the 20 pence area by the end of next month. But the key here, I suppose, is holding recent support at 10 pence. So it'll be interesting to see how the placing and the churn associated with that pans out. That's it from me today. More updates during the week.